trading in the Treasury Bills market got some boost after the 100 billion naira OMO maturities recorded in the system. However, rates remained unchanged. Traders at Axis Bank say they expect the market to witness a bearish sentiment due to the bond auction debit scheduled for today. Ahmed Agboola, fixed income trader, joins me for a midweek update on market activities. Ahmed, thank you so much for taking the time out to join us today. Let's get right to it at that bond auction today. And of course, talk to us about also, in addition to that, system liquidity.
Okay, thank you very much, Esther. So yesterday, I'll begin with the money market. We opened the market with about 47 billion naira yesterday. This is a slight improvement from the previous day balance of about 27 billion. We also got about 100 billion OMO maturity into the system yesterday in the course of the trading session. However, this left little or no significant impact on the OPR and overnight rates, which trended at around 14.5% and 15% levels respectively. In the Treasury Bills market, we saw that this maturity generated a bit of activity in the system, and we saw market participants exposing their bids and offer across the short to mid-tenor securities, especially the OMO bills. Despite all of this, only few trades were eventually consummated yesterday, and we saw yields remain largely unchanged. However, in the bond market, the bond auction happened on Monday, and we expect the debit to be passed into the system today. At the auction, about 225 billion was offered by DMO, and 220 billion was allotted, and we expect that debit to be passed onto the system today. But post-auction, we saw a lot of market activities around the 32s and the 42s, which were being offered at the secondary market at around the same level where the auction rates stopped. For the FX, well, the scarcity of the FX, still remains. We see demand largely outweighs the current supply, and we do not see that changing anytime soon. However, we've seen CBN intervene at different points in time, especially to ease the pressure on the Naira, and we expect them to continue to do this. We also expect that on Friday there will be a retail auction, which we expect to take additional 250 billion out of the system. Combine that with the effect of the bond auction debit that is supposed to happen today, we expect that more pressure will be on the liquidity level in the market, which will also in turn, affect the activity in the fixed income space.
Okay, let's quickly talk about the FX market. At the INE window yesterday, 430.67 against the greenback was the close. So was that a first a new low at the INE window?
Well, it's not. It's been hovering around this. So
okay.
most of the activities that happened yesterday, were consummated around 428, 429 levels, and eventually we saw a depreciation of about 67 kobo, making the Naira close at about 430 Naira 67 kobo to the dollar. Similar trend also was noticed at the FX window, where the Naira closed at about 428 Naira 88 kobo to the dollar. So this has been the trend over time, and until there's an increased level of supply of FX into the system, we expect this to be the situation.
All right, what is your forecast for the rest of the week for the yield curve back to the fixed income market?
Okay, so for the rest of the week, like I mentioned, we're expecting about 225 billion debits today. Additional about 250 billion for retail auction by Friday. So this, continue to put a bit of pressure on the level of liquidity as we have seen in the recent weeks, and this might likely be the situation throughout the rest of the week. So we expect that the market will remain bearish.
But in terms of yields on the short-dated bonds and, of course, Treasury bills, can we expect rates to continue to trend higher?
So, well, it might trend a little bit higher. It surely would trend a little bit higher, considering the level of activities in the market currently. We have a lot more markets, a lot more sellers in the market than buyers. So we expect this to have an impact on the yield.
All right.
So the yield is expected to go up a little bit.